Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you the market recap report for the Monday, June 29th. And we're just going to name this one Surveying the Damage Out There. I did a market prep video earlier today where I talked a lot about the Greek situation, what kind of the impact to the market and whatnot. This I just want to look at kind of the entire marketplace here. And there's been this running theme at the traditionalists like CNBC and whatnot, how Greece was already baked in, it was already priced into the market, how it's no big deal. And we've been here at Tackle Trading telling you guys it's a big deal for a long time now. And I've said this recently where, guys, it's not just about Greece. I mean, if we're just talking about Greece, we're talking about $1 billion problem. It's not just about Greece. It's about what Greece represents. It's about what Greece represents to the other economies out there. It's about what Greece represents to Italy and France and Spain and Portugal and really the representation of the fiat currency system as a whole and the debt that it has incurred through these asinine monetary policies of printing of money. I was watching CNBC just a little bit ago and just listening to these individuals talk about the marketplace. It is so damning. It is so damaging to people to listen to that garbage that Greece didn't matter. Greece didn't matter. It absolutely did matter, and we've seen that across the entire spectrum of the financial markets. When you're talking about the S&P 500 here, a 2% decline in the S&P 500 is an absolute big deal when the marketplace literally drops 45 points in just one day when you're looking at about that market. But also, I drew a little line for you guys a little while ago representing this nice little support level, now old resistance. It came right back into that resistance, and look at that, boom. If you would have been shorting that off that report, guys, that would have been an absolutely killer type of movement over the course of the last just last week. But it also broke this support level at 2070. It's coming into a new support level at 2040. That's going to be the next buy zone. And if it breaks out of that 2040, which is only 11 points away, look for it to at least come down and test into that 2000 level, which is a major psychological level of support. What's interesting to me on a day like this is there has been that mentality in the market to buy the dip. And although we can't be certain what's going to happen out there in the financial markets, we did not see that today. We did not see that buy the dip mentality today. It tried to test back up. It certainly gave it the old proverbial college try out there. As you can see here, we'll just look at the last couple of days. It came down, opened down here on Sunday last night, and really tried to buy that all the way up through Monday and even into the cash open about an hour and a half after the cash open. It starts coming up again as well, but then throughout the rest of the day, just boom, 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 just really got beat up today in the S&P 500. And I was giving a speech on Friday this week, and I said Greece can be that catalyst. It certainly can be the catalyst to like we had catalysts back in 07, 08 as well. And so it's going to be interesting to see how this unfolds. They're not out yet. Like I said, if you want to listen more about my Greek discussions, I did record that video earlier today called Market Prep Video, Greeks versus the EU. So go ahead and check that out over there at tackletrading.com. What I want to do now is I want to look at how it impacted the foreign markets here. And so we're going to look at a couple foreign market indexes very quickly. And the first one we're going to look at is the emerging markets ETF. As you can see, we've already been in somewhat of a downtrend. But it's already coming back in all the way down here to 39. Had a nice little 2% drop today, sitting at the lows of the day. Look for that to test back down as well. You're running into some 200-day moving averages that are very important for the market as well. Here's another one called VEU. This is the Vanguard International Equity Index. This is all the big dogs in the world. Nice little M formation right there. Kiss of death pattern right here at $50, $51. And then boom, 2% 1.79% down. Broke support levels. Look for that to continue down based on technicals. Here's the Brazilian index. Didn't really get beat up that much today, down at 1.69%. Looking setting at support at 32. I look for that to test into the $30 range as well. Here's another one. This is the Japanese index. Obviously, this is an M formation as well, sitting at a support level right there. If that breaks out, look out below on this one. There's no real major support levels for a good ways, probably down to the $12 range. And then the last one here is the Chinese index. And the Chinese index is just getting absolutely blasted. I guess those farmers over there in China aren't exactly having fun just going out there and buying stock instead of producing goods here. Look for that to broke support here, kiss a death pattern here, broke support again, down 2.61% on there as well. On the flip side, you have inverted ETFs that were created for you to buy in retirement accounts and whatnot. Here's the QID. This is the ProShares Ultra Short Qs. Look, had a great day, up 4.73% on the ProShares there. This is the one on the S&P 500, up over 4% today. Here's the DOG index, the short Dow 30, up 1.86% today. Here's the Ultra Shares Short Russell ETF. That one up 2.44% today. And this one is the Ultra Shares Real Estate ETF. And this is why I think the real estate market really has some nasty times in front of it. This is a W formation. This is already in a bullish uptrend, up 3%. That means real estate is getting hit hard right now because these are inverted ETFs against the S&P 500. Now, one thing I do want to talk about here is the VIX, the volatility index. As we've always said, volatility inches its way down, but it goes up really, really fast. It can hover around 12, 14, 15, 16 points all day long, but it can go up really fast. Up 4.83 points today. That is a 34.45% increase on the VIX alone. Now, that is the 8th largest day in terms of upward movement on the VIX in history. And the days that are in front of that are like the days on the 8th of August of 2011 when the Greek situation first came out. That had a little higher VIX increase. And then on 2/27, this is February of 27 of 2007, you also seen a massive spike in volatility at that point. Let's go ahead and look at those very quickly on a weekly chart. Let's switch our time frame so that we can see those daily those movements. So let's go time, switch this out to the last 10 years, and let's go apply. And here we go. So here's the one in 2011. Right there is when it hit. Okay, so here's the first movement it hit, spikes up to about 22, and then throughout that month went all the way up to, well, 45 on the VIX. Huge movement. The S&P 500 in that same time period went down about 20%. So here's the one back in 08, and this was February of 08. So we're looking right here. Comes out right there. And all of a sudden, a huge spike up to the middle, calmed back down for a little bit, and then this is the summer and fall of 2008 when really the VIX spiked all the way up to about 90 points. So we had tremendous movement in the VIX. We had tremendous movement in to the downside in the market. Every market was utterly rocked out there. And then let's look at the currency here. The currency, it was interesting on the dollar and the euro US dollar pair here. Obviously gets beat up in overnight trading. Comes in, opens up on Sunday, fights down. Check out the video from earlier about what really drove the euro today, and it had nothing to do with anything that in Greece. It had nothing to do with the true value of the euro. And for anybody out there that is saying that Greece leaving the euro is a good thing, they don't understand currencies, they don't understand trading, and you should never listen to them. It absolutely is a big deal for Greece to leave the euro, because instead of talking about Greece, we now talk about Italy. We now talk about Spain and Portugal and some of these other debt-burdened countries that are actually in debt further than what Greece is in. And so big time movements in the markets today, guys. Technically, you're looking at and again, there is whipsaw impacts in effect right now. Anything Anything can really happen out there. But a technical read on the market, you broke some short-term support levels. You're testing at the bottoms of the market. Technically, that momentum should continue in the market. And right now I'm switching to a slightly bearish bias, just given what we saw today, and going to maintain that. Now, a couple things in currency trading. One thing, tight stop losses, if we're going to do it, slow position sizes, and I am not holding anything on Friday night, because that Greek referendum coming in to vote to actually approve or not approve the situation over there in Greece to make a deal and whatnot. Too much high risk right now to carry overnight. Too much high risk to really take large position sizes in this. Let's see the price movement first and then take action here. But looks like Greece did matter, CNBC. So let's see if you can actually bring a real trader onto your program and teach you guys a little bit about trading. This is Matt Justice for Tackle Trading, changing lives and securing your financial wealth one trade at a time.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.